All right, everybody, welcome to the stream. I'm taking your questions today. And if you have any questions, type them up in the comments and I will answer them. Lots to go through. So let's just go through those questions. All right, so the first question I have Kim. Hi there, you mentioned e commerce in some of your videos. What tax implications? What would tax implications be to startups for these type of side hustles, as they sometimes require shipping products from foreign countries? Are there any possible local ways to carry out these services? Yeah, so I like e-commerce because it allows you to make money in your sleep. It's nothing nicer than waking up to your cell phone beeping and money in your account in the morning. And e-commerce is open 24 hours. It's awake when you are sleeping. Your store can sell to people from all over the world. Now, I did do a series on this. It's on my YouTube channel, Side Hustle Sundays. Look for that playlist and you can get some more details about that. But essentially, from what you're talking about, local ways to carry out these services, you're looking for a drop shipping service. There are a couple of services available in South Africa. I can't remember them offhand, unfortunately. But you can look at people like Global Sources. Again, on my YouTube channel, I spoke to Global Sources. We also spoke to a South African funder that funds small businesses. So check out those resources. We covered it in a lot of detail. Tax implications. So businesses are taxed currently at 28% for this coming financial year. It's been dropped to 27%. So whatever your profits are, that's the rate at which it will be taxed. And remember that within a business, any costs incurred in generation of that income is tax deductible. For example, if you have a registered business and you're running an e-commerce store, all of the costs involved in setting up that store is all tax deductible. Your internet is tax deductible. Any services that you subcontract, like a web design services, social media services, all of that is tax deductible. Yeah, so that's for any business. Any cost incurred in generation of income would be tax deductible on that end. Right, you also asked, please advise more about placing assets into a trust. What are the pros and cons? Remember that I know you guys, most of the questions I see today, it's all product related. But I would like to challenge you in your thinking about wealth more on being more strategy focused and not so much trust or product related. So when it comes to a trust is a person that you add to your family and a person that cannot die. So one of the advantages of having a trust and setting up a trust and holding your assets in the trust is when you pass away, whatever is held in the trust is not part of the winding up of the estate process. Okay, because it's not in your name. Essentially, the trust owns those assets. What's nice about the trust, though, like I said, it never dies. So assets in the trust can be literally passed on from generation to generation, and it just sits there and it's generating wealth for your family in terms of income, in terms of growth and appreciation as well. So if there are assets that you want to pass on, that you would like to remain in your family for generations, like property, like maybe certain kind of heirlooms, life cover is a great thing to put into a trust. That's where you would hold it. The disadvantages are the costs, but although the costs are high, in some cases, and in most cases, it's absolutely worth it just because of the value that the trust provides, especially when it comes to under 18 kids. It provides them with some great protection. And also, it's not one person deciding. There's a bunch of people, ideally 3 people, trustees, that will decide on how things are moving. All right. Also, YouTube channel has all of the long form content on all of these. So go and check it out. It's everything that you need to know about trust in South Africa. So that's the video that you want to check out on my YouTube channel. Okay, next question. Calvin, which do you feel is a better return on investment overall? Home loans to own property or investing long term in the stock market? It's kind of challenging in the South African environment, given that there are pockets of growth, but generally, It just depends where you are. Property seems to be very depressed. Remember, with this whole land invasions thing, there's certain properties that can't get sold. Certain properties can't are not legible for bank finance. So the bank is not going to finance these sort of gray areas. So finding the right kind of property where you run the numbers, you're not emotionally attached. I think, yeah, I would prefer that over the stock market. But that being said, I would never put all my eggs into one basket and solely depend on property. I would like a nice spread, and other types of investments that are paper assets and not necessarily on the stock market. I would look at all of those options, also because of the taxes as well. Another important thing that I love the most about property is appreciation. Inflation is high, and with inflation, it appreciates the property. So essentially, the value of your property goes up, and inflation is eating away at the debt that you owe as well. Another long form video for you to watch on that is why I won't pay my bond off sooner. So go and check that one out. Also, investment property, again, tax deductible. Any cost incurred in generation of income is tax deductible. Not for employees though, so be wary of that. Okay, some more questions. Sanveer. Okay, Sanveer has a bunch of questions. If you had a lump sum of money, what would be the best investment for that? Now, the best investment would be the purpose of why are you investing? What are your goals? So dependent on your goals, then you would pick an investment. You'd also consider the risk. How much of risk are you willing to take? Can you stomach the risks of the equity markets, the stock markets, up and down, high volatility? Can you stomach that? If you can, that's also a good bet. But ultimately, we want to be tax efficient. Then depends how long you can put your money away for. Are you okay to put it away and forget about it for 10 years? Or you need it in 3 months, or you need it in a year? So there's so many things that you need to be considering before you select the type of investment. And your train of thought in selecting an investment should be your investment horizon, your level of risk that you're looking at, also the amount of taxes you pay, because that's important. You don't want to be in a low tax bracket and being in a high taxed investment platform, or being a high taxed person and not utilizing the lower taxed investment wrappers. Okay, so all of that has to come into your thinking before choosing a lump sum investment. That being said, there's some really nice time-sensitive investments available right now. And if you want to find out more about that, you got to join me for Investor Forum. Okay, we're going to release the dates for that probably next week, where I'll give you market updates. I'll give you my market commentary, what my thoughts are, where the markets are going, where you should be putting your money. It's free for all my clients at Solomon Wealth. And if you're not a client of Solomon Wealth, why? Okay, if you're not, you're going to have to pay for a ticket to get access to that. Any more questions, you can type it up in the comments. I'll go through that shortly. Okay, Sanveer's other question. What are the key things to do to reduce your tax as an employee? So taxes as an employee is one of the highest forms of tax you can get. And the first thing you can do is increase your contributions to typical retirement products. And ideally, you want to do it in your RA and not your work, pension, or provident. Okay, but you got to understand that the pros and cons of traditional retirement products. 3 pros that you can get from traditional retirement products is: 1, it reduces your tax liability. So it reduces your gross income. The growth within that is tax-free. And also it can increase your rebate depending on how things balances over at SARS. So if everything is to the T every month, and it typically is for employees, then most likely you'll get a nice rebate. For people that are commission earners and business owners, it's not as straightforward. So the tax owing maybe could be canceling out that rebate. Just depends on the person doing your taxes. So that's the first thing. I know the cons of retirement annuities as well, such as that 1/3, 2/3, where you'll never have your retirement money in your hand. You have to buy that compulsory annuity. Okay, so you got to decide in your head now, you want those tax benefits now, or you want those tax benefits later? If you want the tax benefits later, then you want to utilize the other tax wrappers in order to plan for your retirement. The next thing that you could do here is make a donation to an organization such as a PBO that issues 18A certificates. And again, another long form content, you got to watch the video or the video series on how to legally pay less tax in South Africa. Kantha Naika spoke about, she gave us a whole bunch of tips that we should be taking advantage of. Okay, so that's the 18A where you make a donation. The maximum donation that you can make as a natural person is 10% of your gross income per year. And you make that donation, you'll get the certificates and you upload it or give it to whoever it is that's doing your e-filing. They upload it and that deduction is made. It reduces your taxable income. The next thing that you can do, there's a bunch of them. I can't even remember them offhand. There's if you have a home office and you're allowed to work from home, there's that dedicated area for work where you have that dedicated area. It's an office area with the desk space and all of that. That is also tax deductible. Okay. If you have content how the banks works, and if I want to take a re-advance on my home loan, how would that work? What benefits or disadvantages of doing that? Yeah, so banks are a whole different kind of beast when it comes to the financial systems, and I'm just going to give you from my knowledge. I'm not an expert at this. It is not something I work with every day. So one of the benefits of re-advancing or taking the equity out of your home is, one, you have to pay down. You have to be in that capital portion and not in the interest portion of what you're paying down. I would also look at why do I want to take out equity? Do I want to upgrade my BMW? Do I want to go for Mauritius for 2 months? If that's the case, then no, don't do that. You gotta be accessing this equity in your home to put it into investments to grow your wealth, because home equity is one of the easiest forms of financial leverage you can use, especially if you're somebody who inherited a home. Okay, you didn't really pay it and you didn't do that 20 years. That's a great that it is why property is basically such an easy thing to use for generational wealth. So you got to take out, if you're going to take out home equity, then you have to put it into an investment vehicle that is going to be growing greater than the rate that you're paying in terms of interest of that home equity loan. Okay, that's what you should be looking to do. Again, it all depends on your reasons and your goals and what you want to achieve, but whatever it is that you want to do financially. So the advantages is, remember, with inflation, your 1 million rand home from 5 years ago is now worth 1.4 million. So you've got a built-in 400,000 equity there if you paid it cash. But over time, as you eat into that capital portion, you have plenty of opportunities to access that home equity. The disadvantage is the interest, but if you watch that video on why I won't pay off my bond sooner, you'll understand that interest is not a bad thing, and it's one of the lowest forms of lending that we can get. All right, I hope I answered your questions there, Sanveer. Okay, next one. The best companies to buy shares in. Again, what are the reasons for buying shares? Now, a lot of people, I speak to a lot of people, like 5 or 6 people every day about money, and we talk about shares. I don't have a license to deal with shares, but we talk about it. It helps me understand more about the goals and what you try to achieve. So what are you trying to achieve with buying shares? Do you want to buy and hold and sell in 3 months? Then, that's not really investing. It's more trading. And then the tax implication there is you're taxed on gross income. Whereas if you hold and you sell at a later date, then you're triggering capital gains tax. So how to identify the best companies to buy shares in is, one, you got to understand your reason for investing. Are you investing for income, or are you investing for growth and appreciation? You got to understand your risk level. If you can't take the risk, if you're not willing to lose, and if the market crashes by 40% in a week, and if you can't stomach that, you shouldn't be in equities. Okay, you got to be in more conservative investments. So once you understand the reason for you investing, whether it's growth, whether it's income, then you would pick companies accordingly. You'd have to do tons of analysis. You got to be following the company. You got to be reading balance sheets. You got to know the industry that they're in. For example, the mining sector or the fast moving consumer goods. You got to be watching all of that, and that's one of the reasons I invest in shares. But there are selected things that I invest in. If you want to take the risk out of picking out shares by hand and not doing all the dirty work what comes with investing in shares, go into an index. For example, in South Africa, we have the FINI. The FINI is tracking the big financial companies, the banks, the insurance companies. So instead of you trying to decide, should I invest in Nedbank or Standard Bank? And Nedbank just announced the biggest dividends ever. So instead of you trying to decide between the two, buy them all in an index and you take the risk. So if the bank is not performing, then the asset manager that's tracking the index, he will replace the bank or she will replace the bank. So that takes away all of the hard work, and obviously that price comes at a premium because you got to pay those kind of platform fees, and whoever you're getting advice from, like somebody like me, then I have advice fees that I charge as well for my services. So know why you're investing, and then work your way, navigate from there, and also get help. Oh, yeah. Is this your account? Now, a couple of new scammers talking to all of you guys. My handle on Instagram is financially.fabulous.females. There's no spaces, there's no underscores. Don't talk to people online. Okay. All right, somebody's trying to call me for some reason. I hope it's not a client. Next one, Olivia. Which RA would you recommend and why? So I'm not going to mention a product or a company here, but know the difference between the various RAs in South Africa. Everybody's governed by that Pension Funds Act and follow the same rules in terms of that. What you should be looking at is either a life company. Yeah, so what you're trying to look at is either a life company or an asset manager. Okay, so now what you want to do here is life company or an asset manager. Now with the life company, the problem we have there is the fees are a little bit pricey. They're not as flexible in terms of I'm paying all my premiums, and then if I have a couple of bad months and I want to pause this thing and then continue at a later stage, the life companies don't usually do that. That being said, there are select products within that life company portfolio that have some really, really nice benefits that's worth looking at and worth taking with them. For example, that ability to fund yourself from your life cover, you can only get that from a life company. You can't really get it with an asset manager. Now, an asset manager has the benefit of giving us great flexibility in terms of how we handle that retirement annuity. And like I said, if I'm paying my premium and I'm having a bad couple of months and I want to pause that thing, the asset manager allows me to do that. If I have an extra 50 grand I got as a bonus and I want to put into my RA, the asset manager allows me to do that. I can't withdraw because remember that the RA, wherever it is governed by the Pension Funds Act, and I can't withdraw that money. All right. So my recommendation, if you want a no frills, really flexible, adaptable retirement product, then it would be with a pure asset manager. Then you're going to have to decide you want a passive manager, you want an active manager. Passive manager is somebody who's an asset manager who's just tracking, watching everybody, seeing who's winning and copying those moves. An active manager is somebody who has all kinds of algorithms and software and economists, and they're trying to make these predictions and all of that. And all of that comes at a premium. You can have the best of both. You can go for one or you can go for the other. But yeah, that's your thinking when it comes to picking a retirement product. So I won't be promoting any company at this point. The next thing is, all right, so those are all the questions I have in my DMs. If there's any questions on my live, all right, no questions on the live. So anything else, let me know in the comments and I can answer them for you. Otherwise, we're going to wind it up for today. I hope I answered all of your questions. Okay, your YouTube taught me about discovery vitality so much. Thank you. Okay, so yeah, if you want. So on my Instagram, you'll find a lot of nice short clips and I hope you enjoy it. But if you want the longer versions of that explain things in detail, a little bit more horizontal thinking when it comes to my content, you got to check it out on my YouTube channel. So on here, you'll find the snippets of what's available on YouTube. Okay, so that's it. No more questions. Either I'm very good at answering questions or you guys are very shy and don't want to answer ask financial questions on this platform. Okay, so no more questions. Yikes. Okay, that's it. Okay, what would be the best way to invest lump sum money and where I'd be able to draw a monthly income? All right, so it depends on the amount in the lump sum. I wouldn't put it in one place. I would put it in various places where I'm utilizing the various tax advantages. For example, in South Africa, I'm assuming, Denise, that you're under 65. In South Africa, under 65s have a tax exemption of 23,800. So I would hold a portion of that money in an investment that's giving me interest-bearing returns where I can utilize that exemption. I would then put it in investment that would trigger capital gains when I withdrew. Because as a natural person has a 40,000 Rand exclusion and a 40% inclusion rate. And that would trigger capital gains. It's one of the lowest forms of taxes that you could pay. I'd also look at my own tax rate. Obviously, if I'm over 30%, I got a bigger variety on what to choose. And if I'm under, I'm very limited. All right, so there's no one answer as to what's the best investment. I know I get this question all the time. What's the best investment? It's more like what's your goal? What's your investment horizon? How much of risk are you willing to take? And look at and try and understand the taxes and all the various tax breaks that you can get. Now, obviously, to not put all of that money in one lump sum, it takes work. And either you do the work on your own or you speak to a financial advisor. And remember also that monthly income is taxed, so you want to utilize as much as you can. Can you see my question, Michaela? No, I can't see your question, but I did see, can you see my question? What is the best interest-bearing account in South Africa? So you have the bank products and you have the investment products. If you don't want the risk, stick to the banks. Problem with the banks is their returns are less than inflation. And sometimes if you have large volumes of money, in fact, I was telling this to a client because we were doing some calculations today, and she was getting 120,000 Rand a year on bank interest. So she had large amounts of money. So when we did the calculation, we figured out that she's exceeded her interest exemption of 23,800. Now she's now paying taxes on money that she has received at a rate that's lower than inflation. I mean, you double tax there because you're losing money. Inflation is eating at your money and you're paying tax on those returns, which is an awful place to be. And obviously we gave us some recommendations how to fix that. What is your opinion on credit unions? Okay, so credit unions are there to maintain compliance. It's just all of the various layers that the banks have put in place for us to try and monitor us. Basically, they're policing us, and it's scary. Some of the information that's on there, like when I go onto ClearScore, there's information on there that I haven't released out, publicly or put it on an application, and it's very scary the level of transparency that there is with the various financial organizations. And it's scary because those transparency is there with us as regular people, but you'll never find that transparency with the politicians and the hiding of dollars in the sofas. There's no transparency there. So kind of annoying, the credit unions, but necessary if you need to get a line of credit, because you need proof to show that you're a good payer. And that's the functions that the credit union forms. And I see credit unions in South Africa now, they have this back door where they're offering you financial products like loans, and obviously they're going to get a finder's fee for the loan. So yeah, finance is just such a messed up space, but if you take some time, you can navigate your way through it. RA or pension fund, does it benefit to have both? Yes. So remember that a pension fund is when there's that employer-employee relationship. So it can only come from the people that are employing you. The gap, I think, in South Africa is because there's so few entrepreneurs, and there's very few of those entrepreneurs are offering retirement products. So you only have those big companies, and they offer their employees maybe a handful of funds that they can pick from. And a lot of the times, a 20-year-old employee and a 55-year-old employee are in the same fund, but they're in different life stages. They have different investment goals, but then you're stuck as an employee. You only have that one fund. What can you do? Whereas with a retirement annuity, you can be as granular